Hello everyone, this is H.M.Studios presents accounting tutorials. Now we are going to see about basic fundamentals of accounting. There are many different accounts that are used to keep track of financial transactions. The main general accounts are as follows: assets, liabilities, owner's equity, or it can also be called as shareholders' equity. And there are two more types of accounts which is also important. Those are revenue and expenses. There are three financial components which is important while recording transactions. It can be referred in accounting equations. Assets equals to liabilities plus equity. Liabilities equals assets minus equity. Equity equals assets minus liabilities. Assets. Assets add value to your company and it can be used currently or for future periods to increase revenue. So total assets equals current assets plus non-current assets. Current assets. Current assets are assets that can be easily converted into cash and cash equivalents. And it can be also known as liquid assets. And there are certain examples of current assets. They are cash, cash equivalents, short-term deposits, accounts receivable, inventory, marketable securities, office supplies. Fixed or non-current assets. Non-current assets are assets that cannot be easily or readily converted into cash. It can be known as long-term assets or hard assets. And the examples of fixed or non-current assets are land, building, machinery, equipment, patents, trademarks. Liabilities. Liabilities are what a company typically owes or needs to pay to keep the company running. Liabilities are also grouped into two categories: current liabilities and long-term liabilities. Current liabilities are those that are due in the next year, while the long-term liabilities will not be due until at least a year later. So the examples of current liabilities are accounts payable, wages, and taxes. Examples of long-term liabilities are bonds payable, long-term loans, capital leases, pension liabilities. Liabilities equal to current liabilities plus non-current liabilities. Owner's equity or shareholders' equity. The amount of cash someone invests in an organization is owner's equity. The investment can be done in money or in other forms, kind of stocks. Examples of equity includes common stock, preferred stock, additional paid-in capital, treasury stock, retained earnings, and so on. Total shareholders' equity equals share capital plus retained earnings. Hope you guys understood the video. Thank you for watching this video. Don't forget to like, comment, share and subscribe the channel.